All right, hey everybody, it's Axe. It's August 15th, and we're in the evening after the Monday session. It's Globex time. I've got a New York Stock Exchange daily chart up right now, and I've got a line version of the same chart, and then I've got Bitcoin over USD above that. And this square here is basically a gap. If I go to the 4-hour, you can see it looks like Bitcoin broke 24K again. You can see there's a gap here, and we had a gap from June, and look how much time we spent there. So who knows, we can get into this gap and spend some time there. But anyway, I thought it was interesting. We closed red barely, but we did 10 points. I was expecting sort of to hit this. I'm sorry, this is SPX up here. I was expecting to sort of hit the top of this range, like 15.9. We're close to that. I think we should fill the gap, but again, this is sort of like a bearish candlestick, like a bearish inverted hammer. We need confirmation on that, so we would need selling tomorrow to confirm it. Otherwise, it's just like the hammer we had Friday, or the shooting star we had Friday or Thursday on SPX before we overran all the bears. So anyway, I've got sort of these ranges up, right? My expected move was right up into this 15.9K range, because that takes us to sort of the May top. And you can see what we did here. In March, we sort of came to the February top. We left this behind. We left some space here. We came up. We sort of retested near it. And then that was the top. And so I just want to be clear. When I talk about tops, I'm not saying the market's going to top. The market could have already bottomed, and we could be going on to new all-time highs in SPX 5K. But if we are going to top, I like to study recent tops, because that gives us insight into what it might look like, right? We don't want to be caught off guard. So if we are going to top, you know, we're watching this. So we want to see how we play in this gap. You can see SPX basically has done what it was supposed to do. We got into this range here, just like we did in March. We're into the range of May here in mid-August in OPEX. We sort of left this range. We went above this range, went above this range. Bitcoin, you can see I've basically got a line on the resistance. In March, it gapped up, and then it topped before SPX did. And here we sort of gapped up a little bit. We didn't even come close to filling this gap, but we're leaving the same sort of dojis in our wake. So it looks the same, but it's also one of those setups where it feels like, oh, it's too obvious. It could be a trap. I do want to note, and again, I've been noting this the whole time, this bearish divergence here, or you could call it a confirmed lower high. This is an impulsive move. I would like to see us, I'd like to see us come back down. If we are going to continue higher and break this range here, the 16.1K, I'd like to see us come back down into here, certainly fill this wick, maybe retest this breakout. I think it could happen in a hurry. I think it could be very similar if we zoom out to something of like what we saw here in September of 2020 or June of 2020. Like it could be like a dive down into here, where we bounce a little bit and then come right back up. You know, if the market did bottom here, and this is a nice clean double bottom with divergence, so I'm not saying it's out of the question, we should retest some levels, at least come back a little bit. Otherwise, you know, it's off like every other time where we go and it's a Tesla and Apple rally, and the rest of the stocks don't participate. So that's the New York Stock Exchange. Now let's get into RSP over SPY. Again, RSP is our equal weight sort of SPY. And what this does is this ratio measures the participation of the broader market, right? So whereas our SPX breadth, which I'll get to in a minute, sort of measures stocks above their 200 daily average or 50-day average. In this case, we're measuring sort of broad participation, right? What's moving? Is it just the leaders, or is it the broad market, right? So when this goes up, that means that the broad market is participating. When it goes down or stays stagnant, that means it's not. And what I noticed here right off the bat, and you've probably noticed it too, is a very similar setup here, where we tried to break out and we failed, and then we came down here. This one, in this case, it's lasted a little bit longer, and you could say, okay, maybe we've got like a little round bottom set up. And here, let me just draw for you. There we go. So we could be setting up something like this, where this is going to spike, but you can see what happened here. And last week I was talking about November, the possibility of setting up a top like November. And I know it probably sounds weird, but when you look at it like this, you can see, okay, Bitcoin sort of like stagnated like we're doing here. It's stagnated at this top. SPX sort of rounded off right here. You can see it. We flatlined for a while. This ratio came down, which meant basically Tesla, Apple, Microsoft, Amazon, whatever, it held the market up while everything else sold off. And so we look for that, say, okay, the market's selling off, but price is staying up. That means something's about to happen. So anyway, we're going to watch this over the next couple of days. If this continues to go down, we know, okay, this could be a very similar setup to that November. And that's the thing that would catch a lot of people by surprise, right? It's one thing to repeat what we saw here in April, May, June, right? Because everybody saw it, participated in it. People, like, this stuff is from the past almost. Like, you almost forget about those 4,800 highs. So we were up here at like 4,600, chopping around. We got to 48. We finally broke 48, and then that's at the top. Boom, off we go. So we're watching. If we get here and this starts to go up, that's a good sign. It may mean that we're going to see some selling and retest those levels I just talked about, but it means that the broad market is participating and they're not selling it off. If we come back down here, that means that breadth is deteriorating. They're using leaders to hold up the indices, and that's a sign that a possible bigger sell or bigger top is going to happen. So you can see, like, this is tricky because here it's sold off, and the market, it set up another top. But then as it rounded up, that's when the selling started. So it's a little bit like, it's not black and white, but we're using like fractal and pattern recognition, and just in general, like, if the market has bottomed and breadth is going to continue, we should see higher lows going forward, which means this has to go up. This ratio has to go up. Otherwise, we come down here, we fill this gap, then things start to deteriorate from there. So that's RSP over SPY. Okay, and here's SPX breadth. This is actually SPX stocks above the 200-day average. So it's a little bit different version of measurement of breadth, but it's still very important. And I've got a couple lines here. You know, we all love lines. This top line is basically our average correction. You know, they're significant corrections, but they're not like crashes, right? They're not bear markets. So every time we come here and bounce, it's a pretty good sign that the bottom's in, and off we go. You can see in October of 18 we hit it, and that's when we hit that consolidation zone where it felt like, oh, the bottom's in, we're going to bounce. Oh no, to hell we go. And we came down to this lower line, and this lower line is more like the bear market line. Okay, so you can see every time we touch this line, the market has bottomed, with the exception of like COVID. But that was a straight, like, down we go. Like, we didn't let up. Whereas now, you know, we, you know, up, down, COVID was just all down. Even in December of 18, we came down to this, we undershot it, we closed above it. This is a weekly chart, by the way, and off we went. So this line basically says if we stop here, the bottom is probably in. And so that's a good thing. You notice even in 2008, in the bear market, people have talked about that March and May, or March and April period, we did not come down to this area, right? So we hit this and bounced, which left room for that bigger decline that everybody's showing in their charts. And, you know, I've showed in my models, but this is something that gives me pause when I look at that model, right? Because we already came down here, we've deteriorated and bounced. And that's why you can see, you know, in 2011, that's why I really like the 2011 model, because price came down, it set a low, it sort of dicked around like we've seen it do, you know, at our 3650, 3700. It bounced, it felt like it was, it had bottomed, and then it came back down for sort of a retest. And that would give us something around like 3,900, 3,850, 3,900. So you've probably seen me throw that number out there a little bit. That's something that I'm watching on this breadth measurement. And you can see even here a little bit of a similar setup. It's not exactly the same. It doesn't always have to be. It depends on the chart and the time frame. But that's something I'm watching, right? So I'm watching, okay, do we come up here and sort of hit this area and come back down for a quick reset? This was, let's see, October of 2011, and we bottomed in November of 11, and then, you know, we went on to new highs. So that's something that I'm watching, and it's something that I think is more realistic, right? We could be in a period where, you know, we're going to go into recession, the Fed's going to force it, but maybe, you know, we don't want to put the cart before the horse. So we're just going to let the data guide us. And for me, this says clearly, anytime we touch this green line, the second one, and bounce, the bottom is in. So we have to assume that maybe the bottom's in, and it's just a matter of how deep we go on a retrace. So I know some of you guys are going to love that. For me, it is what it is. On this topic, though, let me go to Master Microstar. I call it Master, obviously, because I'm typing out MSTR. Anyway, if you want to go to, let's see, this 2011 period, and I said that was October, you can see, I mean, maybe it's a similar setup. And the reason I bring this up is because we didn't have Bitcoin back then, right? We only had Bitcoin in 13, 12, 12 and 13. So I look at this, it came down, it sort of tested this range. You can see, let me draw a line because we love lines. There it is. It came down, tested the range. It bounced. It felt like it was going to go off to new highs, and then it came down and retested. So this could be like your, let's just say this is Bitcoin. I don't remember where we hit 17K, 15K, whatever the hell it was. We came down. We're up here at 25. We double bottom equal. Looks like it filled the wick. Double bottom. And again, this is MSTR, MicroStar. It's not Bitcoin, so Bitcoin could go lower. I don't really know. But you can see here, we had some liquidity gaps to fill, and it eventually filled them. So this is why I think Bitcoin's bear market is not over, and why I think it's going to be a long, slow grind out where people don't want to buy it because it's not going anywhere. I don't think that Bitcoin bottoms on people buying altcoins and just going ape shit and making a ton of money. I think Bitcoin bottoms when people lose interest. So I think that's what's going to happen. So I think we can double bottom here, set a divergent, lower low, bounce, and then this is where we get to that 30K Bitcoin. We come down, looks at retested again, finally breaks it, and this is where maybe we get to 12 or 13K Bitcoin, 10K maybe. We try to liquidate Sailor and see what happens, and then that's when the bull market begins. So this is just a quick chart storm. Just to get myself back in the rhythm, back in the mood. I will do some more videos, maybe later tonight, maybe tomorrow. But to be honest with you guys, it's been a while since I've done one, and I ran a couple practice ones this afternoon, and they were just dog shit. So that's why I haven't shared anything with you guys. So hopefully this is to your satisfaction. I appreciate you hanging with me through my travels and through this crazy bear market, bull market, whatever we're in now. Let me know if you have any questions. You know where to find me.